I'm in.
It's like a boy band. I started a boy band.
Heads up, 7
There
up.
you go.
Who's got the choreography?
Not with the singing again.
Everybody.
There he goes. Yeah, yeah. Rock your body. All right. We are going to, it's not karaoke night. Well, it is once this is over, but this is After the Bell, brought to you by Arbitrage Trade. I am Darren with Arbitrage Trade, and this is, of course, After the Bell. So let's just say it one more time and we'll be done. The perfect threesome. My guests are Daniel Hopwood, who is an ex-institutional wealth manager. I guess he's still a wealth manager of his own wealth.
Well, his own wealth.
Yeah. We got
He's
Josh
retired.
Morgan.
He's taking it private.
Josh
I was like,
Morgan.
I am not a financial advisor. And this is not financial advice. Let's be very
All right. You're beating me to my thing. My next section here.
Licenses and put him back on the street.
Bottom left, you have Josh Morgan, a.k.a. JPM, a.k.a. Josh Morgan, a.k.a. The Banker. Okay, so then we move on to Royce Wells, the CEO and the scriptwriter and the coder and everything else here at Arbitrage. We're all thankful for him, of course. And I, again, am the resident retail guy who throws poo at anybody who doesn't agree with me. And we're going to move on to the disclosures. We are not financial advisors, as Daniel said. That doesn't mean just he's not, but we all four are not. And this is not financial advice. This information is surely for educational and we hope entertainment purposes. Please always consult an investment professional before making any financial decisions. So let's get going. We could call this NVIDIA Force Day, or may the sales force be with you. I don't know. But we had two big, this is actually being recorded on a Wednesday. So we had two big releases that happened after the bell, the actual bell. And NVIDIA Salesforce went up, I think. Anybody got the latest? Is it still up? Anybody got
it went up.
I knew you would. Okay. And then NVIDIA, of course, did as well. They also announced, or they went down, I should say, almost 4%, 5%, a total of about 6% for the day or something like that, 6 or 7%. The range, if you would, it went up to 128, then down to 115. And now, at the last I saw, is it still down near 115 or is it up about 120?
It popped up a little bit. It's back up to like 118.
Okay, so they're just playing with it up and down. Could be a nothing burger, but if you were able to follow that down and make some money, then great job. I was waiting for you to say it and brag. There was a $50 billion buyback that was announced, which was really the big news out of that. Because, the figures were pretty close and everything else. And then, bam, $50 billion buyback. And so that's what's happened immediately. But because we have the millennial writing the show, he wasn't satisfied with the title of We Are Back last week. He had to bring it back again this week because he was so excited about last week. So the first real title here is We Are Back.
All right.
Please tell us, Daniel, why we are back.
We're 1% away, or we were when, I made the agenda, 1% away from all-time highs. Bitcoin was on the rise. It's back. It is not. But, the real big news is Powell confirmed in Jackson Hole that rate cuts are on the way.
Oh, he did, huh?
About that. That doesn't look,
that
doesn't look good. I don't think that's good.
But that's in the script. Come on, he's just reading the script. Do you remember the bullet points that are sent over to him every week? That's what he's doing. Let him do his thing. They send the same script over to CNBC and everybody else. Everybody gets the same script. But yeah, he did say that. I think he said, from what I remember, that it's still based on data. It's not a for sure thing yet. But he was very, very dovish. And I think that was on purpose. As we know, they love to jawbone at the Fed, but of course they would say that they don't do that. So, what you said? Royce, what's going on?
Well, I'm gonna basically do a history lesson, a small history lesson, but a history lesson nonetheless.
Sit back.
What happened July 17th of 2007? All-time highs. What happened September 18th of 2007? Rate cut. What followed all of that?
October.
Yeah. And then November, December, and all of that, right?
Yep.
We're set at the exact same point. If you go back July 17th of this year, same thing happened. We had nearly all-time highs. we're pulling back, and there's a rate cut that's set for September 18th of 2024. The charts are literally almost overlapping. So please be careful if you're out there. It may not be the same history, but typically the Fed does not cut unless they see something coming.
I've got another thing to add on to that, Royce. I know I sent it out to you guys earlier, but there's something around the 2000.com bubble that also is being represented here, but even worse. And that is that tech, in my opinion, never really left. It's still there. It's still the bubble. The top 10 stocks in the S&P 500 represent 38% of that market cap. And that percentage is a full 12% more than it was back in the 2000.com bubble. So if you can imagine a bubble being inflated even stretchier, that's where we might be. So
also,
more. There's more.
Just a little bit more. There was a housing crisis. When we're sitting on top of a housing crisis or in a real estate crisis because all these people are working from home, right? What if there was a crypto bubble, because crypto is nothing more than a derivative of cash, and we got in trouble with derivatives last time if we did in the housing market? What if they decided to deflate crypto? You heard it here first.
We talked about the whole derivative thing last week as well. So yeah, it's definitely not as apparent on your media, but it's still out there. That information is on the Fed report. So by the way, going back, anything else on that as far as the bubble goes, Banker?
Oh no, just I all the parallels that I brought up last week to the 2007, just it's getting more and more, and I mean you get a lot of these analysts that have complained about we waited too long to rate cuts, and Powell wanted to see something a little bit more concrete, and I think that the cuts or the adjustments with the jobs, realizing that holy crap, it's worse than I thought. Even though he's got better data than we would ever have. And
never.
But I mean, it's just
crayons.
You can understand why they're saying it's going to take we waited too late. A lot of it's starting to make a little bit more sense, because even a rate cut now is not going to have an immediate effect. It's going to take 4 to 6 months to actually trickle down to something that's even remotely relatable to you and I. It might help. Right. Might help some companies with some buying power. It might prop the job market up a little bit. It'll certainly bring in some of the buyers that are sitting on the sideline with the housing market and things like that for a brief period. And then it won't be for another month or two before we really start seeing the fallout.
Okay. We're going to jump into that housing a little bit later. By the way, just back to NVIDIA. Did you see, of course, I like to look at the little charts and the volume and everything else. At closing, it was a 17 million share candle for NVIDIA. It was like everything was like this, and boom, there's that 17 million candle and right back down. So why is that? What happens? Because the price only changed 60 cents. With 17 million shares being traded, only 60 cents difference from the price difference. Why does that happen, Royce? What's going on?
Well,
you know what I think, but go ahead.
Well, there are several mechanisms or levers that are basically being pulled there. It could be someone putting in a short position. That's why basically it's not necessarily a buy. Remember, the price will go up if you cover a short, but if you're beginning a short, it will drive the price initially down. So basically you're saying you basically increase the supply in the market by saying, I'm saying I'm willing to short this, and so that means if there's anyone out there willing to buy it and basically go against your short, you basically made liquidity. You pretty much gave more supply to the market, which of course will definitely drive the price of the equity down, as we're seeing partially from the $12 move that we are seeing on NVIDIA as it has gone down from there.
Yeah, it's just funny how it took that long to go down. I mean, that 17 million was traded, and then it took a lot more ticks before it actually went down. So, interesting.
You got to feed the volume in there slowly. Don't want panic.
17 million doesn't seem slow, but Hey, by the way, when you see a $17 million candle, does that mean that there's just let's make it easy, 8.5 million buys and 8.5 million sells
No, not necessarily. So from that perspective, it's a matter of like, for example, it's like you're literally setting up shop. If it is a short, you're literally saying there are 17 million more shares of Nvidia that are available to trade in an already saturated market. And
Gotcha.
basically, if people are willing to buy that price, it stays at that price. Remember, the stock market is nothing more than an auction. So if people are not willing to buy at that price, they keep lowering the price until someone is willing to buy. That's what the job of a market maker is for.
Right.
Because basically, you create a supply, and basically, if there's not enough demand to cover the supply, the price of the equity will fall.
Okay. All right. Daniel, Mr. Bitcoin Applehead, or whatever we called you this week. You're up next. We're talking about crypto donations, and I'm getting visions of Sam Bankman-Fried in my head. But
hey, I will do something about the beard. Go away.
Was you wearing shorts too and all? Yeah. Hey, Daniel, go ahead and introduce this section. It's about crypto donations and kind of what you brought to the table this week to talk about.
Yeah, so I just saw like a headline, small article, and I thought it was interesting that it said crypto companies are responsible for nearly half of all corporate political donations in this election cycle. And I thought that was really interesting because, up until 2-3 weeks ago, whenever Kamala became the nominee, I don't want to say the crypto rhetoric, but the actual action against crypto from the left was quite negative. And I don't really know if the right had much of an opinion other than when Trump came in, he was like very pro crypto, right? How that actually plays out, I don't know. And now you're seeing Kamala kind of, mimic a similar position. And so I thought it was interesting to see that, half of all corporate donations coming from crypto companies is like insane. And the typically heavily politically left Silicon Valley elites, a lot of them now are coming out and being very pro Trump. And you like kind of famously have Andreessen Horowitz, both of those guys publicly saying they're pro Trump solely based on the fact that he is pro crypto, right? They're not concerned with any other issue. They're just like, he is pro crypto. We believe in this industry. Obviously, they're talking their book a lot bit there.
Of course.
But I think it's, it's kind of like if you had told me that 2 years ago that it would look like this, I'd be honestly probably pretty shocked.
But that's just one way to get buy-in, right?
Helps with, 7 of the largest ETF managers all holding crypto assets now.
Yeah, if you remember, there's been flips, because even the OGs, the old guys, if you will, in the markets hated it at first. And we keep saying this, but now all of a sudden they love it. So it's just a matter of the love of money. I'm going to go wherever that is. And so they're both sides. I've seen both sides adopted, if you will. So it's crazy. Is it something that's going to stay there or not? And then if, like Royce said, is there going to be a big event that might make everybody sad? I don't know, but
I don't know.
Originally, remember when the old guys in the market that said, yeah, it's just a tool for corruption.
Right.
But later in the years, they said, okay, let's do it. We can make money off of it. So, it's just wherever I would say that a majority, if I had to bet, and I'll send the money to you if I win on a crypto stick. Yeah. But I would say a majority of them are actually on board with crypto until they're not. Yeah. All right. Anything?
You guys. Go ahead. Sorry.
Go ahead.
I say what should scare you guys is that basically of the printed money, what's being printed and minted every year, only 7% of that money is what is circulated. 93% of the money that we spend is digital currency.
That's US?
That's US dollar, whether it's via swiping with a credit card or any other derivative that they've created. So basically, when they say cash is king, cash is about 7%. The rest is credit, digital. So
yeah. So essentially, Josh is just a credit monster over there. He's not.
Like you can print as much money as you want. You can print as much money as you want.
That's right. A representation of it digitally.
I'll give you just an interesting side note there, being in Asia, like in Singapore specifically, assuming you have a Singapore bank account, you would never have to carry cash in Asia. I don't think we have them in America, but in Asia, it's really big to have, even if a place doesn't take credit card, they have these QR codes that you scan. And there's kind of like a bank wallet, right? A Venmo,
Yeah.
Zelle kind of system, if you will, where you just
Yep.
scan it, type in how much you owe them, and it sends them the money. And so, pretty much cashless.
Well, we're headed towards eye recognition and all that good stuff too. At least that's what I think
They're
the master
doing that
plan
in
is.
the marijuana and cannabis industries already. That's how that's one of the ways they're skirting the banking system here in America. They're selling those goods with crypto using QR codes and then paying for it with digital assets.
There you go. There you go. So, Cash Monster or Digital Monster, Josh, anything to add before we move on?
Yeah, well, actually, I had not heard anything about this until Daniel brought it up, and so I kind of dove into it. It's actually a little bit more interesting because you kind of think of like, are they donating to one party or the other? But it's not. It's these like large super PACs that are actually very bipartisan and pro crypto. So, and I mean it. To show you how little it leans one way or the other, what their primary focus on are like House candidates, and they've got 9 Republicans and 9 Democrats. The only time that it skews a little bit one way or the other is that they've got like 3 Senate seats that they're trying to buy, essentially, that they're pro crypto, but they're also a little bit more left. They're helping with these Democratic candidates that are going, against Republican candidates. So, and it's really not that like, and the reason that's even more interesting is because if you look at the overall sentiment of like Kamala versus Trump, as far as crypto is concerned, most people think that Trump is more favorable to crypto than Kamala is, because Kamala has shown very little support, and she has 0 experience. And Trump has done all of his weird cards and shoes and all everything crypto related, and he's got experience.
He just had the NFT, or not the NFT. The NFT. The NFT, but it was for their like properties or something, right? Didn't they have something?
We had this whole like trading card thing where you could buy like images of Super Trump that are all basically AI generated garbage that
and match those gold shoes.
I know.
Gold shoes.
I gotta be honest. I kind of want one of those. It sounds kind of interesting.
You should look up the images. It's hilarious. Like, this was something that really existed and people really bought it.
And he did gold coins too, didn't he?
You guys know there's a MAGA coin?
Yes.
I think so. It seemed like, yeah, exactly.
Hey,
whatever it takes. That's right.
Tulip mania all over again.
All right, but I do agree with you that it is not a party thing; it's a bipartisan thing, and just people want money. Let's go on to Uber. So Daniel says that Uber is going autonomous, and if there's already been so many problems that we've seen with autonomous driving, why would they do that, Daniel? What's going on?
Well, so I think it's one of those things where Uber doesn't, I think they just turned profitable, right? They don't actually make a lot of money, and they were a lot more like of an interesting and used business when all of my Uber Eats and Uber rides were subsidized by Sequoia VC money. And so I really think they're looking at one, how can they pivot to generate more revenue, what's like a higher profit margin business model, and two, like they kind of have to compete against, what is looking to be the likes of what will be the Tesla taxis and Google's Waymo. So, they're looking to partner with the GM Cruise, which when I lived in San Francisco, I remember I used to see those cars driving around all the time. And so I think they're personally looking to, one, obviously innovate, but two, figure out a kind of new revenue stream so they can stay relevant and competitive. Because, if not, really, they're just a taxi app service, and they can deliver you overpriced food.
Yeah, there was I guess a goal of Elon was to make X the everything app, and I think it still is. And I'm kind of getting those feelings from Uber. They want to be the everything app, if you will. And maybe just maybe down the road there could be a merger between those two. Who knows? Just throwing that out there. CNBC does that all the time to drive up prices. So I'm just going to say, hey, maybe they're going to join each other. Mergers and acquisitions. Here we go. Everybody throw their money.
I think it's way more likely that it would merge with like the Tesla taxi, right? Because he owns, more or less both of those. It probably wouldn't be like a Uber situation.
Well, they're talking about rideshare coming up for the
You
moon,
can't
right?
have monopoly, but you can't have your hand in the other pot too.
Hey,
yeah.
Sorry, go ahead, Darren.
No, I was just gonna say that's true though, because Uber is not. It looks like they're going to work through GM Cruise, not actually be part of the cost of it. Will be to maintain the cruises.
Well, that's what they've done. Like that's the whole thing that they've done is they back in 20 because they were one of the originators of these autonomous things and like slightly before like Tesla and everybody got on board. And back in 2020, they sold off their automated driving division or their AV division and for like $4 billion and then just completely got out. And now they've slowly been partnering with all these like Daniel mentioned, the Waymo. They even have hit up, they're even partnering with BYD in China. And then now with the GM, even though if you really want to hear something interesting, you should look at the rocky situation that GM has had over the past like 3 years. I mean,
is it similar to the Ford EV situation where it's just like burns money?
44K.
Oh, it's not. No, I'm talking about like all the missteps that they've taken, like, and all the bad things that like they've had to recall their entire fleet because it just started breaking randomly, and cars and bikers would run into it.
You just freeze.
They hit some lady and like dragged her down the street and never stopped.
Okay. So you're talking about specifically the autonomous vehicle thing, right?
And that got them kicked out of California. I mean, this is all not really autonomous. This is specific to GM Drive. And they've laid off 25% of their staff. They've laid off, I want to say, half of their executive team. They can't do anything in California anymore, and they are pretty much only in like 3 or 4 cities that you can actually do anything as far as testing or autonomous vehicle or mapping or anything like that. So, yeah, this is going to be a blip on the radar as far as the stock price is concerned, because this is a 5 to 10 years down the road kind of thing.
I agree with that for sure.
Yeah, no, definitely a long-term strategy thing. I don't think it affects the price in the next 2 years, most likely.
All right, let's go ahead and move on to, as you put it, J-hole, which rhymes with something else. But no, it's.
Hey, you've never heard it called J-hole?
But
that must be like a skiing, snowboarding term.
Yeah.
But it stands for Jackson Hole, but it could really, in this case, stand for Jerome Hole. So that's kind of the way it was presented.
I didn't even think about that. I was just lazy making the agenda.
I like that one. That's his new nickname from now on.
What happens when you shorten things? All right, so Powell says that rate cuts are on the way. I say that it was time for him to say that. And we kind of talked about it earlier in this same broadcast here, but it's always, and we talked about it last week too, but again, every week we say this is still current stuff, and it's stuff that it's kind of liquid. It changes every week, what everybody says. But to me, he pretty much said that it's still data dependent, and they've kind of changed their focus from inflation being an issue to jobs. So there's a reason for that, in my opinion. The jobs are going to get set up to be a certain way that they need it to go. Not that they, the numbers aren't exactly 100% correct, but the path is being laid out on future job releases. That's as far as I'll go with saying my conspiracy theory hat. So what are you going to add there?
Yeah.
That's why I stopped. So No more J-hole from me. Daniel, anything to add there? And then we'll go to Royce has already talked about this a little bit in the beginning, unless he wants to add something, and then we'll go to the banker there. Okay.
I'm good.
What you got? What you got, Daniel?
Yeah, no, I think they probably saved it a little bit for the big Jackson Hole Summit thing they do to kind of be a little bit more prominent on that they're gonna cut now. And I think if he didn't say it, it would be very concerning after the almost 1 million jobs that were revised in the
Right.
job numbers.
Right.
And
one was released right before the other, right? I mean, it's something.
I think the kind of the big question now is like, how much do they cut? And Darren, we talked a little bit about this in our deep dive, is that I personally think if they cut too much, that it shows how wrong they were. Like if they cut more than 1% by the end of this year, I think it shows like they were wrong on how long they waited. But analysts are seeing, or I should say, estimating that they're going to do rate cuts by 50 bips, and that you could expect a potentially even larger one if employment numbers are worse the next time they release before the next Fed meeting, September 17th. So I think we kind of know they're going to cut now, but the big question is like how much, and how much kind of determines how scary the numbers might actually be versus what we kind of get reported to.
It's the whole thing. Once you get started,
because they're always too late, right? They have to see the data, right? Which means like it's already too late. You're behind. So
and they're still saying
and we know how we started with that in COVID, right? We went from 0 to 5% in like a year, which is like absurd. So maybe we'll go from 5% to 0 in a year now. Like I don't know.
Wow, no way. Because then inflation would be
crash, but yes,
inflation would be 20%. What you got to say there?
Just don't print money this time.
Oh, I mean, a lot, I guess. But it's
now wait a minute. Let's keep this to an hour.
It's all over the place. But I mean, yeah, you're kind of at this point, if it goes back to what I was saying a few weeks ago about it's not as much of like when and how, it's a matter of why. And if the Fed is being pressured by outside influences like job or a softening economy, then that means that they've kind of lost the battle. There's no real, that means kind of the whole, golden path or soft landing or whatever avenue you want to go, or whatever term you want to use, is kind of out the window at this point. Now it's the Fed's more reactionary than they are the ones that are leading the charge. And so if now that they're reactionary, things could kind of spiral out of control a little quicker than we had hoped. And again, it just means that they don't have this amount of control that we thought they did over this situation. And even I think in Jackson Hole, he even admitted that I think he said that they were, he was wrong for not starting higher interest rates like sooner after all the money printer went burr and we got, the huge influx in inflation. And then he waited and waited and waited. And it was great for like 6 months, but rates should have gone up 6 months prior. And he's even admitted to that point, and we've not inflated away all of the debt. And now the problems coming from inflation are rearing its ugly head. And he just can't, he's not going to be able to really guide us the way that he wanted to,
So reactionary, which
which is not a good place for them to be.
No, it's not. It's not. But I mean, it doesn't matter what they did. You're just talking about taking orders. Us conspiracy theory people feel like they've been taking orders forever from certain places, and plus partnering with the stock market. But hey, that's my role on this show.
You play it well, sir. You play it so well.
Harper 2028. I'm getting ready. So
you're old enough.
It's got to be better than the other two.
Talk about needing National Guard everywhere I go. No, I'm just kidding. Royce, you said you've already talked about this. So let's head on to housing. We'll do that real quick too. I'll let you, because you brought some numbers and facts and figures. One of the ones which I brought up in my 3 things, one of these days, I believe. But it was talking about the cost of housing went up again. So for the average price, I mean, almost 430 now,
Yeah.
which is just nuts. So Daniel, what's the other numbers did you bring?
Yeah, so I'll kind of say these numbers, and I would like to hear Josh's opinion to see if if this is just kind of data or if this is kind of really what's being reflected. So freshly constructed homes rose about 10% in July from the previous month, which was like a pretty big number. The median sale price of a home in July jumped about $15,000, and closing sale prices of previously owned homes jumped 1.3%. And so, with rates potentially coming down, that makes mortgage rates a little bit cheaper. People are clearly starting to buy homes. Maybe it's just a summer thing, it's warm, right? But is this kind of the first indicator, and that you're going to see a rally in I don't want to say a rally in housing prices, but you're going to see home sales start to pick up where we've been on pause for a little bit. So hear Josh's opinion, and then Royce can maybe analyze a chart for us and tell us if that's really what's going to potentially come up.
Well, yeah, I mean, builders and construction, they're trying to kind of thread this needle. Now that we see that rate cuts are on the horizon, interest rates should come down a little bit. So you're going to see buyers coming off the sideline, and the market's going to pop a little bit. The flip side of that is, I don't know if you saw actual production, like inventory, dipped quite a bit from June to July. I think
so you mean people were taking their listings down or just listing less?
No. I'm talking about new home construction.
Oh, new homes.
Both private and like single family. So, and I'm talking about private, single family, multifamily, all of them from June to July saw almost like a 10% dip in new starting. Like when I say new construction, I mean even going back from like pulling permits, like requesting new construction, like actual physical housing starts dipped by 7 to 14%, depending on private versus single family. And then completions dropped 10% on private, and then 1% on single family. And it's just like they're trying not to build all of these houses because they're trying to get in. You don't want to build oversupply. If you overbuild, you oversupply, so the market goes down. If you undersupply, the market goes up. But that's the problem that they're dealing with on the other side of it. Interest rates are going to come in, and you're going to see like I said, a little bit of a pop in buyer supply. What happens after that is going to be the fun part. And I don't know what that is.
Just a quick question. Is it because from what I'm seeing, especially like the stocks of the builders that build the higher income houses is seeing a reaction here and going up, but is it more of just the elites being elites? Are the higher prices of everything that's had a higher price seems to be doing okay in this economy? But if you get down to the economy or value, that it's tough. Is that the same in housing?
Oh yeah, absolutely.
So new houses, yeah, you're going to buy higher price. So
I mean, yes. And I just for example, I had somebody come in and I've got somebody that's a cash buyer on my house, and my house is not cheap. And the fact that there's a buyer that's literally going to pay that much in cash, or wants to, continue to pay that much in cash for a house like that, is a prime example of, the haves are completely not, I don't say completely unaffected, because they still have to pay the same prices as we do. But
the haves are having.
It's just it's because of what we're doing right now, that disparity of wealth and the differentiation between the top and the bottom is just
right.
It's rapidly expanding.
Right. It's kind of validation from what I've seen, or at least suspected. Royce, got anything to wrap it up here?
Oh yeah, for sure. The fact that a house is like, I'm going to basically give you a couple numbers on my house. And I bought my house in 2001. I bought it for $145,000. That's what I bought my house for. That joker is literally topping about 420 right now. 3-bedroom, 2.5 bath. And I'm going, how?
That's just average price right now.
And that's just the average price. The major difference is basically back then the interest rate when I got it, this is public record, so when I got it was basically I think it was 6.185, I think was my interest rate. Right? On a $145,000 house, basically, well, still paying it off, etc. Doing my due diligence. I'm about 20 years in, 24 years in, got about 6 years left. So I'm almost to the end of that road, right? But someone just trying to get the exact same house, it's literally 3 times as hard for them to do the exact same thing because one, their income, salaries did not keep up with.
Has income gone up 4 times in the last 24 years?
I wish only. If
I mean, mine definitely
became
hasn't.
an entrepreneur. But like literally, I've seen absolute dumps. Like my mortgage is I think 12.25 a month, and that's what it's been for the last 20 plus years. 12.25. You can't rent anywhere, or would trust your kids to stay anywhere that if the rent was that cheap. Like I just couldn't. I wouldn't. And right now, because they know that people cannot afford to buy, rent is going through the roof. They're like, you can't qualify? That's great. $2,600, $3,000. You want to live here? You have to pay. You will never own.
Yeah, that's what I was going to ask Mr. Morgan if they had like Blackstone on their shirts when they came for the all cash offer, or BlackRock or Vanguard. Was there any patches on their shirts?
Hello, sir. We're here to buy this home for 30% over asking.
But I mean, to Royce's point, there's an interesting, it's interesting because to Royce's point, like rent has gone up, but it has not gone up as much as it could have. Like rental prices could have squeezed. The catch you get into is the fact that leases are locked in for like 2 years. Some people sign 3-year, 4-year leases. So, and there really are very, very few ways that you can go back and like, you'd have to basically buy a tenant out. Then you'd go and fix the house up, try to find a new tenant. You've got months of vacancy. You've got, and then what it's going to cost to buy a tenant out, because typically it's like 2 months of rent plus deposit and all of that to, buy a tenant out of a lease. So the cost of that, the cost average over, month to month over the course of the 2 or 3 years that you might have that house, or the next tenant might have that house, you'd have to almost double the price. And that works in some areas, but most areas it doesn't. So that's why rent has lagged so much further than, like home sales are crazy. Like legitimately, I am currently sitting in a rental right now where if I tried to buy it, just the basic mortgage would be more than what I'm paying right now.
Yeah, you have water view though, right?
Yeah, I know, it's great.
Well, and by the way, to our viewers, basically this is Josh's business, so that's why we listen intently and ask him questions about what's going on in that industry. So he's a good resource for us. We're going to go ahead and move on to this just came out today. There was an SEC regulation that passed and one that did not. That SEC regulation was that basically they're shortening the window of when these ETFs and mutual funds have to basically reveal what they have in their portfolios. So it's going from essentially a 90-day window to a 60-day window, the way I read it. Now which is a whole month. A whole month earlier. And this is all for transparency reasons is why they're doing it. So there was another one that did not get approved though. And that was for a thing called swing pricing. Are you guys familiar with swing pricing at all? No?
I don't even know what the first thing is that you're talking about. I want to know more.
The first one was just about basically transparency. That you know how you can basically, if you show your portfolio, and we're talking about the ETFs and the funds, basically, there's a basically 4 times a year they have to show that. So essentially, it could go from, like, if it was the very beginning of that quarter when the portfolio was created, they could wait until the first month of the next quarter to reveal. So what's that, 4 months, I guess, a difference between when it actually was done. And I mean, it could be that long. So it could be 4 months that you don't know what somebody has in their portfolios, the ETFs and the mutual funds. Now they're shortening.
But like ETFs that track a benchmark, like, isn't it just assume that at most moments that they're holding, the distributed value of the S&P 500?
Well, I don't know if it's specifically by value or by specific to what is in the ETF, like by name. I don't know. I'm not sure. All I can tell you is that,
I didn't know if you knew more, because I was like, if it's
no, because it just got
S&P 500, it's like, if Google makes up 10%, right, and any plus or minus 1.1%, I'm sure they're just have a computer trading it back and forth. But
yeah, I agree with you on that 100%. But no, it's just basically shortening the window of when we find out what was in each ETF or mutual fund as a public record, I guess, if you will, because you can go back and look at those and see what all is in this ETF, what all are they holding, what all happened within that ETF 3 months ago. So now I guess you can find out in 2 months. It's just to close the window, so that they're saying that increases the transparency, you will, of what's going on behind the scenes. That's the way I read it. Whether it is or not, who knows?
T plus 0, not T plus 60.
And it doesn't even take effect till next year, November of next year. And then if you have $1 billion or less, it's not even going to take place till the 2026 May, I believe it is. So just threw that out there. It's going to, like anything that they do and they approve, okay, it's approved now, but it doesn't take effect for 2 years when you've already forgotten about it. So we're going to move on to, swing pricing mandates, let's see. Swing pricing is a pricing. I'm going to read it so I don't get it wrong. Swing pricing is a pricing method whereby the cost of redeeming shares in a mutual fund are passed on to the redeemer, which can limit the effect of a panic sale in stressful times. So they're trying they're trying to address something because of possible panic times. And they've been doing that for, I guess, I think this came out in 2021, the ultimate panic time, I guess. So it's like they're addressing things that have to do with panic time. So who knows why? Maybe
why
they're getting ready for something.
Panic times if everything's fine?
It is fine. There's no fire behind me. Oh, wait a minute. Over there is. It's green over here. Yeah. There's fire over there.
Hey, no yelling recession in a crowded market. Okay.
That's right.
Right.
So, I mean, again, there's really nothing to add to that, I don't think. But if you guys have anything you want to throw in there, I mean, it's just something that came out today. I figured, why not throw it in here? We'll follow up on it in 2 years.
I mean, I wish they would do. I wish they do that 30-day requirement for senators and congressmen and stuff like that. And not,
or how about just not at all for them?
ETFs.
Right.
That's right. They are the best stock pickers of all time.
Mm-hmm.
Hey,
so
they're not governed. Why not?
Or you have the new Harris's VP who just only has cash, which is ludicrous.
Hey, maybe he's trying to buy houses. Maybe that's who went and talked to JP Morgan.
I know you.
With all $50,000 he has. Like,
All right, so let's move on to we are getting to a time here that's an end of a season. And the end of the season, we had one person that pretty much did not participate, and that's Daniel. So he gets the DNP trophy. And then we had the latecomer who tried to take over the whole contest with JP Morgan and his little.
He sounds a little sore,
like
Josh.
that.
He sounds a little sore.
I am a little sore. At least last week I was a lot more upset about I was triggered last week, but this week I'm just sore. So what I'm talking about is this whole season's been 20 weeks, I think. We've had a wager on who can predict where a stock is going to go next. There's rumor that Royce heading into the next season might have a secret weapon, so we'll have to see how that works and see if he goes 20-0. But let me go ahead and pull up. Let me see. Let me just pull up.
Oh, he's an ape. He's an ape. I'm sure you're just crying. With less travel.
All right, it's time for we got two things. We got charts, crayons and charts, which we're kind of doing out of order, but I think it makes more sense at the end anyway. Then because if we want to go ahead and discuss whatever the next stock is going to be, we can do that at the same time. So it's all on you, Mr. King of the pickers.
All
what we
right,
got coming up?
Let's go take a look. I'm going to actually start somewhere and then end up someplace else. First off, we were talking about real estate earlier. Don't like saying this for our time frame, for our chart. We got some dollar signs on us, so that basically we should be taking profit. This was the weekly chart letting us know when we should have got in, was around 2,200. Hopefully you guys were following after the bell to basically see this guy go up, because we've been talking about him for at least 3 to 4 months, and hopefully you got to ride all that ride. Well, things are getting a little bit sketchy because we're seeing that our dashboard is now finally topping out over 70% on multiple bands, and with a basically a pullback potentially going back down to 2602. If you guys basically are going to also recap on NVIDIA.
So, Royce, before we move on,
yeah.
Basically, the indicators were saying basically, what was it, late April, that you should have been jumping in?
Yes, late April we should have been jumping in, and basically we called it. We talked about it. We expected it. We even drew these arrows, and it's kind of nice when the arrows actually play and do what they're supposed to. So from
there
that
you
bottom,
go. Yep.
we see it go up. We got the weekly time frame with that giant recycle symbol saying, yeah, we're a go, so you should be here. And then basically it went on up and followed through. So
there you go.
We're at the top of the market for real estate, but let's see if we're at the top of the market for AI. Looking at NVIDIA is having a little bit of a pullback. It's on the 116.99 after hours, after having its earnings call. I'm assuming they were good or bad, not sure. But I do see that Z Pro is horribly overextended. Anything above 70% could have a knee-jerk reaction, causing us to go the other way. So while this guy is low, there's potential he may go even higher. Or if he pushes this low long enough, there's a chance that staying in this area will force him to go even lower. So watch out for the red recycle symbol on NVIDIA if you're looking to do something. Now, basically, because we did defense last, I'm going to go to Lockheed Martin. And yes, so
look
war,
at that.
defense, and all of that. So as it draws its symbol, we had a basically roughly around the 2 days ago, the 26th of August. Basically, it's calling for us to pretty much buy into defense currently. So where we are, where we're sitting, there's a good chance that there's more to come. going to the daily time frame. And I'm going to turn on this band just so that we have a little bit of perspective. And I'm going to turn on a few of these things so we see a little bit more of the band. And I'm typically not in dark mode, but since I am in dark mode, let's go light for just a moment. And bring in that background so we can see a little bit more of these charts. Background is turned on. He's turned on. Buy and sell signal. And over here, we are seeing it's trying to redraw and rethink this. Where is my background? Dark mode on. That's why. Okay. So turn that guy back on, giving our RSI line back, giving our mean line back. We see our band, and so far, so good. There's a lot of support on this guy if he were to go down suddenly around 529. If he were to go down there, but don't see him going down there anytime soon. Looking at this on the daily time frame, we see that 550 roughly is the floor for this guy with a potential of 542 near term. But the top out, they're saying 568 with a potential of 637. So whether we're going to war, whether it'll be a World War III, whether this is just us posturing just in case, better safe than sorry. Find out more as you watch the next After the Bell.
All right. So you're saying that is the stock we're going with.
Yes.
And again, like you said, and that's crayons and charts, by the way.
That's just crayon and charts. That's not
Arbitrage after the bell. But is that your stock pick for us with the channel? And
no,
everything?
we can go into that next if you want to do that.
That was are we going into World War III or not? Thank you. I appreciate
that. We're going to World War III or not?
Because DFAN went up and now Lockheed is going up crazy. So okay. Thanks for the doom and gloom. How about what is your stock for
Daniel?
So since we're going to war, I'm actually going to mess with potentially.
She's telling a story here, guys.
First Solar. I'm expecting First Solar to actually go up. So basically, our dependence on power and all these other things, hey, it might be a good opportunity for people who do own homes to find alternative means, whether it's generators, solar power, or whatever. First Solar, I'm expecting this guy to go up. So that's my pick for this week. He has a range of about $30-ish. So it means each person gets about $750 if you want to go that way.
What's that range?
About $30 from about 211-ish, 212-ish, all the way up to about 246.
Okay, so we'll say that's 35. So that gives you can do the math.
Nah, we can't. It gives about $9 roughly.
Thanks, but First Solar, I thought just had some news this past week. It was one of the solar companies that had a CEO change. I don't know if it was them or not.
Potentially, they had good earnings. So if you're still looking at the screen, they had good earnings.
Yeah,
but where will they go? Who knows? But from where we're
solar, go ahead.
Potentially, it could go up. But right now, things are looking very doom, very gloom. But remember, you always want to buy low and sell high. So this might be that opportunity. I'm not a financial advisor, just for the record.
That's right. Well, the solar industry in itself is having a tough go at it, and a lot of stocks could be in that doom gloom, especially as we change administrations too. So there's a whole another dynamic in there too about who is pro green and who's not as much green as you will, and how many things happen because of the administration that's in place that pretty much brought the whole Green Deal or tried to make it all happen. Thanks, AOC. And then those that are coming in that may or may not go along with that too. So it's a crazy time to be especially for episode 1 of season 2 of this wager thing. It's kind of spicy. So I guess the DNP trophy winner gets to go first. So the proposed channel was 211 to 246. Daniel.
Correct.
So let's you said that's about 8.5 or so. I don't know, 9. What?
Yeah, 8.5, 9.
Okay.
Depending, we may give him the lanyap so that way he adds a little extra, and then
DNP handicap.
Yeah.
So go ahead, Daniel. What's your opinion? Say ye.
Let's see, probably take the whatever the upper range is.
Upper?
Okay.
You mean that you get
So
the plus?
from 245
Plus.
Yeah.
Well, you start at about 8 back, right? So 238 plus.
238 plus. Yep.
We'll go with that then. So you're at the top range. I get to go second. What was the price right now? And what was that stock symbol, by the way?
FSLR.
FSLR. Yes.
FSLR. Because your screen only had the title of the company. It didn't have the FSLR. So what was the, what are we at now?
So we're at 238 is the next mile marker. Going
Okay.
down. If you're going lower, then basically 211, you go up about 9, so you wind up at 220.
I'm taking the next down 230 to 230.79.99 basically, because I think there's going to be a macro thing might happen that'll drive everything down for the next week. So that leaves 222 basically up to 230, and then below 232.
Okay.
I mean, sorry, 222.
222. Gotcha.
Yes.
All right. Hey, Josh, go ahead.
I want the mid range. I'm seeing a perfectly lateral move.
So you're
Okay.
222 to 230 basically, and I'll get the sense right, but 222 to 230.
Okay.
Yeah.
And then Royce is below 222.
Thank you, gentlemen. I see what you did there.
You that's your penalty for winning. There must be a penalty.
I see.
And for having a
This
for
will
having
be
a secret
remembered
weapon
and reflected
in your next
accordingly.
review. That's right. Who's running this show? I totally just respond to what I'm written. I don't have none of this is my opinion at all. So blame it on
Yeah,
Daniel.
you can't
Anything I say.
edit. You can't edit the agenda or anything.
That's right. All right, guys. We had a good time. We actually stayed under an hour. Thank you very much. Not an hour and 20, as we were very windbagged last week. Hopefully, we have a lot more to talk about. Hopefully, not too much to talk about next week. And good luck with your NVIDIA and your Salesforce at opening tomorrow.
Absolutely.
Everybody say bye.